Good morning, Sonja. Miguel, how are you?
Good morning. Welcome to the show, Supal.
Well, it's an honor to be here.
Thank you. So we wanted to give you a call to kind of talk to you about what's happening out there in the marketplace and the economy. And, I'm sure a lot of people have seen some losses in their investments. And just to see what you think, what your advice might be and your take on everything that's happening right now.
Yeah, going through a change as rapid as we've gone through in the last month, it can be incredibly jarring. About a month ago on February 19th, so about 5 weeks ago, we were humming in one of the strongest economic environments that this country has ever seen.
Yeah.
For 11 years running, we had the longest, what we call a bull market in history. And that's the period of time where the economy continues to grow, stock market continues to grow. And we hadn't seen anything like that before, not even in the 90s.
Yeah.
When we had the big tech boom. And then all of a sudden, with the coronavirus coming about, it led to a very scary time because just like with the snap of a finger, people's employment situations now are up in jeopardy. We may go from having one of the strongest economic environments we've ever seen in our country to the worst economic environment overnight. And subsequently, the stock market dropped 30%. So all of this money that we've been working hard and saving for our future suddenly is 30% lower. So during a time like this, when you have so much change happening so quickly and unprecedented change, we've never really had a global pandemic in modern times, since 1918. And our natural tendency is to always think that this time is different, and we are hardwired as human beings to think emotionally. So this is a prime time for us to have emotional and panicked decision making, and put ourselves in a situation where we could easily make a lot of errors. So a time like this, more than any, is really important to keep a calmer head, to think through our actions. And to really remind ourselves that with all the hard work that we've been doing and the goals that we've been saving for, what is the greater purpose of what we're saving for these goals for? Is it something like retirement, a goal that we may not get to for another few decades? Or is it something that's more short term, that is going to be happening within the next few years? In our investment strategy, rather than making it reactionary based on the coronavirus or the environment of today, we should really be looking at what is the risk tolerance that we need to achieve our goals in the most efficient manner. And what we have found is that for a lot of the younger investors that aren't going to be touching their money for a while, this has opened up really good long-term opportunities potentially for them to take a serious eye towards. And then for the more short-term investor, this is once again a reminder that we don't want to put all of our eggs in one basket. It's really important to make sure that we have a diversified nest egg, that we're not taking risks with money that we need in the next few years, and that we're not putting on the back burner money that we're likely not going to be touching for a few decades out. We should be letting that continue to work for us.
So Supal, what do you?
Number one lesson I would say.
Yes, go ahead. Sorry. Go ahead.
The number one lesson I would say is that more than anything, this is really a time for us to dig deep and ask ourselves, what are the things that we are working for? What are our goals? And then based on that, go back and look at the actions we've been taking towards those goals and see where our risk tolerance aligns. In many cases, the best action for long-term goals is really no action. It's to keep with the strategy that we've been implementing the whole time. And for those that are working towards more short-term goals, then it's really important to take a look at what you have been doing to see if it makes sense to rebalance or reevaluate that risk tolerance that you have for more short-term goals.
So now, for somebody that is thinking, like we were just talking about this, I don't know if you heard it while you were on the phone, but we were just saying that what if somebody has the thought that, we don't know what's going to happen in the future. So I don't want to take the cash that I do have and tie it up in investments right now in a time like this.
Yeah, that's a really great question. What happens is that at times of uncertainty like this, our natural instinct is to go the other way and not buy because we're more nervous about things getting worse. The interesting thing is that I have found that the investment markets are the only place where the average investor runs away from a sale. Normally, when we have a Black Friday sale or something's 30% off or 20% off, at any other thing outside of stocks, we will flock to that sale. Doesn't matter if we have to hit people along the way to get into the store, we'll do it. The interesting thing that we found historically is that every time there's been a crisis in the past in the world, if we just went ahead and took advantage of buying opportunities that existed during that time, once that crisis dissipated, we'd be significantly better off for it. And we can just pick about any major crisis that's happened on the planet. So what I would recommend is rather than taking all of your money and putting it on a lump sum basis and buying stocks now, for example, it would be a really good idea to take a look at all of the really good quality companies that were good quality companies a month ago, are still good quality companies, but for some reason their stocks have gotten beaten up. These would be companies that we can really be focusing on. So what I would say to that investor or that individual that's nervous, that's lost some money in the market, they have extra savings, but they're nervous about putting it in, is that as long as you have the money that you need to cover your needs for the next 6 months to a year, if you have additional funds that you're saving for long-term goals like retirement, your financial independence, this is a great long-term opportunity to take a look at. There's a process called dollar cost averaging, which means systematic purchases over an extended period of time. So we may continue to have volatility for the rest of this year, perhaps. We don't know. So if you have money that you want to go ahead and invest with, just do systemized purchases every week or every month for the rest of the year. And even if markets continue to be more volatile and go down, you'll be able to take advantage of even better buying opportunities. And then over the long run, you'll be better off for it.
Okay.
Makes sense.
Yeah, it's just so hard to tell because there's like people right now. You know what? Do you know anything about the what's happening with the mortgages and the banks? Because we had just talked about how in California they're postponing the mortgages for 3 months, and that seems like eventually it'll happen around the country, maybe.
Yes, that is going to be a coming wave that we're going to see. Both Fannie Mae and Freddie Mac, which are government-backed mortgage agencies, and they own the majority of the mortgages in this country. So basically, they own, I believe, about half of the mortgages that are in this country. So when you get a mortgage from your local bank, they're going to go ahead and then take that mortgage and then sell it to one of these government-owned mortgages. And what they also announced is that because of the coronavirus pandemic, they're going to offer what's known as forbearance, possibly for up to 1 full year, where you can defer your payments due to economic hardship. And then California did partner with a number of the big banks, from Wells Fargo to Citigroup to Bank of America to U.S. Bank, and they also offered anywhere between a 30 to a 90-day forbearance, where if you have economic hardship because of this coronavirus, you can go ahead and be eligible for mortgage forbearance. So this is something that likely we're going to see. This is an unprecedented situation. To put it into perspective, just last Thursday, unemployment numbers came out for the week prior, and 3.3 million Americans filed for unemployment in the last week.
Wow!
And that, and to give you an idea, the worst period of filings we have ever seen in this country prior to last week was in the worst of 2008, when we saw 670,000. filing. So from
Wow.
670,000 filings in the worst of 2008 in any given week, we're up to 3.3 million this last week.
Yeah, that's insane. I was actually talking to my brother earlier in the week, and he told me that he's in New York. He tried to file for unemployment, and he couldn't because their website had crashed. And there's so many people that are going through the same thing right now. Like the unemployment websites are all crashing because there's so many people filing.
Yeah.
So yes, we're seeing that the unemployment websites are crashing. The Small Business Administration loan is crashing. Their website, Small Business Administration, they're also providing assistance to small business owners. Restaurant owners, store owners who have had to potentially lay off employees are looking at not being able to pay their bills in the coming months. They're also going to be getting assistance from the Small Business Administration, and that website has also crashed. So we're seeing that a lot. These systems aren't designed to handle this type of flow.
So, Supal, if anybody wants to get a hold of you, if they want to talk to you about their personal finances and maybe some steps that they can take to kind of try and protect themselves or to try and take advantage of, the opportunity that we have, because I saw somebody on Facebook that had posted this thing from Warren Buffett, and I don't know if it applies right now. You could probably tell us better. But it said that when it rains gold, you grab a bucket, not a thimble. And I don't know if
absolutely
if it's raining gold right now. It sure doesn't seem like it everywhere else in the world.
Yeah.
But like you were talking about, it may be as far as investments go.
Yeah, the quote I believe he said was that every decade or so, dark clouds will fill the economic skies, and then they will briefly rain gold. And he also said what you said. Opportunities come infrequently. When it rains gold, put out a bucket, not a thimble.
Yeah.
And Warren Buffett is a great guide for us to see what smart investing is all about. What he looks at when he's purchasing companies is all about purchasing fundamentally strong companies. Companies that have a deep value proposition in the space that they're in. I'll use an example of a company that's one of the largest companies that Berkshire Hathaway owns. It's Apple. And he sees that how Apple has a very unique proposition in the marketplace.
Yeah.
How they're uniquely competitive, have a loyal customer base, and the reason why he stays as an investor for a company like that is that even when they go through big challenging times, like right now, where we have a coronavirus, a large chunk of Apple's manufacturing comes out of China. It's dependent upon a strong consumer to be able to buy all their goods. So if there's going to be a company that's going to be negatively impacted by the coronavirus, it's going to be a company like Apple. But Warren Buffett didn't sell a single share. He continues to own every share of Apple.
Wow.
And the reason why is that he also knows that if there's a company that is well managed enough that could go through a storm like this,
it's Apple,
and come out even better, it's also Apple.
Yeah, that makes sense.
So interestingly enough, last year when the stock market went up 30+%, Warren Buffett underperformed the stock market significantly because he was hoarding up cash. They have about $125 billion in cash hoarded up right now.
Yeah.
And he underperformed when everything else was going up last year. And now he hasn't sold anything and is going to begin a buying spree.
Wow.
When it's really important for us to remember that we shouldn't be running for shelter when it's raining gold. And usually during periods of when we have dark clouds that are filling the economic skies like they are right now, there will be a period in time where they will briefly rain gold. And more often than not, we are not there to buy it because we're too nervous to purchase. So we have to set up systems in place because we have to realize that we are hardwired to think emotionally and for the short term.
Yeah.
We have to set up systems in place like systemized purchases, working with an advisor that is experienced that can guide us through this type of volatility. And I have found that when you're working with a financial advisor that has the experience and has gone through situations like this in the past and come out of it, and can put in a systemized process to help you to achieve your goals, the probability of you achieving them in a more efficient manner is much higher, and the probability of you achieving them with greater peace of mind is also much higher. So I would, of course, be happy to help anybody or any of your listeners that have any questions. You're more than welcome to call me on my, and I'll give you my office number. It is area code 619-358-9893. And please feel free to call and let us know that you were a listener of the podcast, and I'll be sure to reach out to you right away.
Well, thank you so much. We appreciate, the tips and the advice. And yeah, definitely if you guys have any questions, if you're worried about what's happening with your investments, with your finances, or if you have been stashing away cash and you see the opportunity that's coming amidst all the horrible things that are happening in the world and you want to take advantage of that, definitely give Supal a call.
And Supal, how long have you been a financial advisor?
I'm in my 17th year now as a financial advisor.
Very cool.
I started right after the dot-com bubble burst in the tech after 9/11, and been doing this ever since then with Ameriprise Financial.
Very good.
Awesome.
Very good. Well, thank you so much for your time.
Yep, we appreciate
it.
Thank you,
and I thanks for having me on.
Thank you.
All
You
right.
have a great day.
Take care.
Bye.
Bye-bye.